This Wall Street investor sell-off on the housing market just got even worse. Blackstone is now taking an $80,000 loss on the house behind me. This is by far the biggest price cut I've seen from a Wall Street investor yet. I'm here about 30 minutes north of Tampa, and this is the fourth house I have now found that Blackstone is selling. And this is a big concern for the U.S. housing market and the housing market in Florida more specifically. A lot of the people who bought in this neighborhood over the last 3 years, they saw their home values go way up because the investors were pushing the prices up. Well, that is no longer the case. In particular, on that house that Blackstone is selling, they bought it in the middle of 2022. They paid $490,000 for that house. They now have it on the market for $415,000 with an entity called SFR Acquisitions 2, which is owned by Home Partners of America, who's owned by Blackstone. A $75,000 loss. I want you folks to think about that. Blackstone is selling at a $75,000 loss here in a neighborhood called Wesley Chapel, which is about 30 to 40 minutes north of Tampa, maybe a little longer depending on traffic. Why is Blackstone willing to sell a house here in a desirable neighborhood? The median incomes are over 100 grand, according to data on RevenTrap. Why is Blackstone willing to sell at a $75,000 loss? But now I want to show you the problems this is causing for the neighbors here, this Blackstone home sale. We have a lot of homes for sale in this neighborhood. The inventory is absolutely exploded. And in particular, I want to show you one just down the street. Pay attention to this, everyone. This is a house for sale for $412,000. It's a 3-bed, 2-bath. 1,500 square feet. And this owner is pricing it at the same price that Blackstone has on their house, while the Blackstone house is about 800 square foot bigger and has an extra bedroom and bathroom. So there's no way this owner is going to sell this house for $412 with Blackstone on the market for $415 down the street. This house is probably worth closer to $350 based on the Blackstone price. And as a result, if you look on Zillow and the number of saves this house has, it only has 5 saves in the last 30 days. No one's interested, obviously, because the market values here have gone way down. And this shows the power that these investors have to influence values in a neighborhood and to change the dynamics in a neighborhood. When the investors were buying over in the last 3 years in the pandemic, the people in this neighborhood loved it because it caused their home values to go way up. But now the people in this neighborhood hate it because it's causing the values to drop and drop by a lot. And what you got to understand, everyone, is that the market value of your house is based on the marginal buyer, the marginal price, what the next person is willing to pay for the house in that neighborhood. And so if Blackstone continues to drop the price on their house and sells it, that will eventually go into the comps for all the houses in this neighborhood and drive the prices down further. Now, if you look at data on RevenTrap, you can actually see that home values in this area are only down by a little bit. Median list price is only down a couple percent year over year. In fact, the Zillow Home Value Index is roughly flat year over year in this area, actually still going up in certain parts. So we're not seeing yet in the aggregate data these huge declines in value. And that's why it's so important that you guys out there pay attention to your housing market right now. Because while the aggregate values are really high and while a lot of sellers are still really crazy on what they're asking, we keep finding more individual listings where there's huge price cuts, huge price cuts. And I do wonder how much Blackstone's going to have to cut the price on that house for. They cut the price $75,000 and no one's buying it. They weren't able to find another investor. They weren't able to find a regular home buyer. It's just sitting there on the market, and this presents the big problem for the U.S. housing market right now, is that the demand is on ice. Regular home buyers, they're gone. They're out of the market. Real estate investors, especially the corporate investors, they're out. The yields don't make sense. The cap rate for buying a property in America, if you're an investor and you buy a property in America, you're getting about a 4.5% return on average, maybe a 5% return. Blackstone, they tried to rent out that house, they couldn't. Now they're selling it. Real estate investment's turning into a money-losing proposition in many parts of America, especially down here in Florida, due to the property insurance crisis, the increasing property taxes, and the HOAs. And so if the investors aren't there to bail out the market, and the regular buyers aren't there, the mortgage apps are at a 30-year low, who's gonna step in and buy these houses, especially now that mortgage rates have already dropped by a lot. The 30-year fixed mortgage rate is around 6% right now. It's already gone down by 160 basis points from peak. We were at a 7.6 mortgage rate in October of last year, November of last year. We're now at a 6% mortgage rate less than 12 months later. No bounce back in buyer demand is occurring. And this is where it gets really scary and where you could see home values declining by a lot. There's lots of these sellers, like the one I just showed you around the corner who overpriced their house. That seller around the corner on the 3-bed, 2-bath, they bought it for something like $350 or $360 in 2023. They're still trying to make a profit on it. So you still have these other sellers who are just out to lunch and don't realize what's happening. And a lot of them are being stubborn on their list price or delisting their property with the idea and the implication that somehow it's going to get better 6 months later when they go to sell it. Somehow it's going to get better in the spring. But the longer that the buyer demand stays on ice, the less likely that becomes. And I fear we're going to reach a capitulation point soon where the sellers start to freak out and realize that, no. It's not going to just get better if you wait. It's going to get worse. The Fed just cut interest rates by 50 basis points. What's that going to do? Is that doing anything? So far, no. We'll look at the data into the future to see if that changes. But so far, no bounce back in buyer demand from the Fed cutting interest rates. I think once sellers realize that, it could be a really long way to go down before we find a market clearing price. Home values in this area north of Tampa are 30 to 40% overvalued. And again, folks, I want to say, this is a desirable neighborhood. It's actually kind of a nice neighborhood. You can see a lot of the homes are cookie cutter. I believe this was a DR Horton development. Maybe it was another builder 3 or 4 years ago that built these homes, but lots of families here. You can tell we're around Sunset right now. It's a kind of a nice vibe. Median income's over 100 grand. Even this area is now starting to get hit. Now, folks, I just drove a mile down the street to a home building site from DR Horton, and I think I just figured out why Blackstone might be selling in that neighborhood over there. And that's because I'm standing in the middle of a DR Horton townhome rental community that clearly they just built. And this place is empty. There is no one here. There is not a single car in any of these driveways over here or over there. That's my car over there. In that direction, they're building even more. So we have all these vacant rentals from DR Horton just down the street, obviously increasing the vacancy rates for rentals in this area, driving down the rents in this area. We know that Blackstone had to cut the rent on that house before they sold it. And you really have to wonder, folks, the double whammy of investors selling with builders still delivering a huge pipeline of homes. What is that going to do to the local housing market here in Florida? This has the potential to turn into a major, major crash. I mean, who's going to rent these townhomes? I wish I saw how much they're renting for. I would guess, if I just had to look at them, they look like they just got their certificate of occupancy. I'm going to guess these are 3-bed, 2-baths on the market for around $2,100 a month, $2,200 a month. We'll see if I'm right. But yeah, this is a big, big problem. And if you look at the number of homes under construction in America, the number has declined significantly. We're at 1.5 million homes under construction. We were at like 1.8 million a year ago. So we have a deceleration in construction, but it's still at a very high level. Look, folks, even more townhomes, rentals, no one in the driveway. No one here. But we still have a big pipeline of units that's going to be delivered in the next 6 to 12 months, especially in states like Florida. Data on Reventure app shows that the building permits here in Florida have only gone down a bit over the last year. They're still close to a record level of building permits at a time when the market's crashing. I mean, this is insane. When you actually think about this, everyone, if you're a buyer investor, you actually got to be feeling pretty good if you've been someone who's disciplined. If you've been someone who's waited the last 2 or 3 years patiently and stacked your cash, look around at what I'm showing you in this video, because you're going to get some buying opportunities. You're already starting to get some buying opportunities, but I think it's going to get even better for you over the next 6 to 12 months. And so what I would encourage you guys to do is prepare right now and actually start making offers on houses below asking price. I just talked to a realtor today in St. Petersburg. She said she's seeing a lot of homes that were asking $400 end up selling for $350 or $320. Because people make offers below asking price, and sometimes sellers accept it. And so don't always be discouraged if the price is too high, especially if you have some cash Go in there and make an aggressive offer, 30% below. You might get laughed out of the room 9 out of 10 times, but on that 10th time, you might get the house, especially if you're in an area where home prices are forecast to drop. The Reventure app home price forecast score for this zip code in Wesley Chapel is in the low 30s, indicating a declining market. The way I would use this home price forecast score, everyone, target the areas with low scores. These are areas with higher inventory, higher price cuts, higher DOM, where the sellers will be more willing to negotiate, and just start making lowball offers. You might find yourself actually surprised at what some of the sellers are willing to accept, because this market here in Florida is turning fast and is going down really, really fast, even though the aggregate data only shows a couple % decline so far. Very clearly, something bigger than that is happening. So go to www.reventure.app and sign up for a premium plan if you haven't already, and start preparing yourself to make offers and get a house at a good discount. Check out that home price forecast score. That's a premium data point. Also look at the overvaluation rates in your market. The higher the overvaluation rate, the higher the discount you're going to want from asking price. And start targeting some zip codes and counties where prices are moving down and where potentially you can find a good deal. Overall in the market, we're not there yet, but you got to start preparing now. So head to www.reventure.app and do that.